Question 1. What type of life insurance policy provides coverage for a specified period, typically ranging from 10 to 30 years, with a level premium and death benefit throughout the term? A. Whole life insurance. B. Universal life insurance. C. Variable life insurance. D. Term life insurance. Correct answer: D. Term life insurance. Explanation: term life insurance policies in Michigan offer coverage for a specific duration or term, providing a death benefit to beneficiaries if the insured passes away during the term of the policy. Premiums for term life insurance are typically lower compared to permanent policies like whole life or universal life, making it an affordable option for individuals seeking temporary coverage. Question 2. Which type of life insurance policy offers flexibility in premium payments and provides the ability to adjust the coverage amount and death benefit over time? A. Whole life insurance. B. Variable life insurance. C. Term life insurance. D. Universal life insurance. Correct answer: D. Universal life insurance. Explanation: universal life insurance policies in Michigan allow policyholders to adjust their premium payments and death benefits based on their financial circumstances and insurance needs. These policies offer flexibility by accumulating cash value, which can be used to cover future premiums or accessed through policy loans, providing a versatile option for long-term financial planning. Question 3. What type of life insurance policy provides coverage for the entire lifetime of the insured and includes a cash value component that grows over time? A. Term life insurance. B. Universal life insurance. C. Whole life insurance. D. Variable life insurance. Correct answer: C. Whole life insurance. Explanation: whole life insurance policies in Michigan are permanent life insurance products that remain in effect for the insured's entire life, as long as premiums are paid. These policies feature a fixed premium, guaranteed death benefit, and accumulate cash value over time. The cash value component grows on a tax-deferred basis and can be accessed by the policyholder through loans or withdrawals during their lifetime. Question 4. Which type of life insurance policy provides an investment component where the cash value can fluctuate based on the performance of underlying investment options? A. Whole life insurance. B. Term life insurance. C. Universal life insurance. D. Variable life insurance. Correct answer: D. Variable life insurance. Explanation: variable life insurance policies in Michigan allow policyholders to allocate premiums into investment accounts that are tied to various investment options, such as mutual funds. The cash value of a variable life insurance policy can grow or decline based on the performance of these investments, offering potential for higher returns but also subject to market risks. Question 5. What type of life insurance policy is specifically designed to cover funeral and burial expenses, with lower benefit amounts compared to traditional life insurance? A. Term life insurance. B. Universal life insurance. C. Final expense insurance. D. Whole life insurance. Correct answer: C. Final expense insurance. Explanation: final expense insurance policies in Michigan are intended to cover the costs associated with funerals, burials, and other end-of-life expenses. These policies typically have lower benefit amounts compared to traditional life insurance policies, making them more affordable and accessible for individuals seeking to cover specific expenses without a large death benefit. Question 6. Which rider can be added to a life insurance policy to provide an additional benefit if the insured's death is the result of an accident? A. Accelerated death benefit rider. B. Guaranteed insurability rider. C. Accidental death benefit rider. D. Waiver of premium rider. Correct answer: C. Accidental death benefit rider. Explanation: An accidental death benefit rider in Michigan can be added to a life insurance policy to provide an extra benefit if the insured dies as a result of an accident. This rider is separate from the base death benefit and can provide additional financial support to beneficiaries in the event of accidental death, subject to the terms and conditions of the rider. Question 7. What type of rider can be added to a life insurance policy to provide a lump sum benefit upon the diagnosis of a specified critical illness, such as cancer or heart attack? A. Disability income rider. B. Long-term care insurance rider. C. Critical illness rider. D. Accelerated death benefit rider. Correct answer: C. Critical illness rider. Explanation: in Michigan, a critical illness rider is designed to provide a one-time, lump sum benefit to the insured upon the diagnosis of a covered critical illness. This benefit can help cover medical expenses, treatment costs, or other financial needs that may arise due to a serious illness, complementing the traditional death benefit of a life insurance policy. Question 8. Which rider can be attached to a life insurance policy to provide supplemental income replacement if the insured becomes disabled and unable to work due to injury or illness? A. Long-term care insurance rider. B. Accelerated death benefit rider. C. Disability income rider. D. Critical illness rider. Correct answer: C. Disability income rider. Explanation: a disability income rider in Michigan is an optional addition to a life insurance policy that pays a monthly benefit if the insured becomes disabled and unable to work due to a covered injury or illness. This rider helps replace lost income during the period of disability, providing financial support to the insured and their family. Question 9. Which rider can be added to a life insurance policy to cover expenses associated with long-term care services, such as nursing home care or home health care? A. Critical illness rider. B. Disability income rider. C. Long-term care insurance rider. D. Accelerated death benefit rider. Correct answer: C. Long-term care insurance rider. Explanation: a long-term care insurance rider in Michigan allows policyholders to use a portion of the life insurance death benefit to cover expenses related to long-term care services. This rider provides flexibility by offering access to funds for long-term care needs while preserving the core benefits of the life insurance policy. Question 10. Which type of rider can be added to a life insurance policy to provide coverage for the insured spouse or child under the same policy? A. Spousal term rider. B. Child term rider. C. Accelerated death benefit rider. D. Critical illness rider. Correct answer: A. Spousal term rider. Explanation: in Michigan, a spousal term rider is an optional addition to a life insurance policy that extends coverage to the insured spouse under the same policy. This rider typically provides a level term insurance benefit for the spouse, offering additional financial protection within the same policy structure. Question 11. What is the primary purpose of the underwriting process in health insurance? A. To determine premium rates for the policyholder. B. To evaluate the financial stability of the insurance company. C. To assess the risks associated with insuring an individual. D. To provide customer service to policyholders. Correct answer: C. To assess the risks associated with insuring an individual. Explanation: in Michigan, the underwriting process in health insurance involves assessing the risks associated with insuring an individual, including their health status, medical history, lifestyle factors, and other relevant information. This evaluation helps insurance companies determine appropriate coverage and premium rates based on the level of risk. Question 12. Which risk assessment tools and methodologies are commonly used during the underwriting process for insurance policies in Michigan? A. Only physical examinations conducted by licensed physicians. B. Financial audits of the insured's assets and liabilities. C. Actuarial analysis of statistical data and mortality tables. D. Psychological assessments of the insured's mental health. Correct answer. C. Actuarial analysis of statistical data and mortality tables. Explanation. In Michigan, insurance underwriters rely on actuarial analysis of statistical data and mortality tables to assess risks associated with insuring individuals. This involves calculating probabilities of future events, such as mortality or morbidity, based on historical data and other relevant factors, to determine appropriate premiums and policy terms. Question 13. In life insurance underwriting, what is the primary purpose of using actuarial tables and mortality tables? A. To calculate the surrender value of a policy. B. To estimate the cash value accumulation over time. C. To assess the risk of mortality and determine premium rates. D. To determine the beneficiary of the policy. Correct answer. C. To assess the risk of mortality and determine premium rates. Explanation. In Michigan, life insurance underwriters use actuarial tables and mortality tables to assess the risk of mortality associated with insuring individuals. These tables provide statistical data on life expectancy and mortality rates, helping underwriters determine appropriate premium rates based on the level of risk. Question 14. What role does underwriting play in determining policy premiums and coverage in life insurance? A. Underwriting determines the surrender value of the policy. B. Underwriting assesses the risk of insuring an individual and sets premium rates. C. Underwriting determines the cash value accumulation of the policy. D. Underwriting decides the term of the policy. Correct answer. B. Underwriting assesses the risk of insuring an individual and sets premium rates. Explanation. In Michigan, underwriting plays a crucial role in determining policy premiums and coverage by evaluating the risk associated with insuring an individual. Based on this assessment, underwriters set appropriate premium rates and determine the coverage terms of the policy. Question 15. How does cash value accumulation work in permanent life insurance policies in Michigan? A. Cash value is equal to the death benefit of the policy. B. Cash value accumulates based on the performance of the stock market. C. Cash value grows tax-deferred over time based on premiums paid. D. Cash value is determined by the policyholder's age. Correct answer. C. Cash value grows tax-deferred over time based on premiums paid. Explanation. In Michigan, cash value accumulation in permanent life insurance policies is tax-deferred, meaning that the cash value grows over time based on the premiums paid into the policy. This cash value can be accessed by the policy owner through policy loans or withdrawals, providing a valuable benefit beyond the death benefit. Question 16. What are surrender charges and penalties associated with early termination of a life insurance policy? A. Charges incurred for adding policy riders. B. Fees imposed for making changes to the policy beneficiary. C. Penalties for withdrawing cash value or surrendering the policy before a specified period. D. Premiums paid on a monthly basis. Correct answer. C. Penalties for withdrawing cash value or surrendering the policy before a specified period. Explanation. In Michigan, surrender charges and penalties refer to fees imposed on policyholders for accessing cash value or terminating a life insurance policy prematurely, typically within the policy's surrender period. These charges are designed to cover administrative costs and mitigate risks associated with early policy termination. Question 17. What are policy loans in life insurance, and what are their implications for policy owners? A. Loans taken against the cash value of the policy. B. Additional premiums paid to enhance policy benefits. C. Penalties for late payment of premiums. D. Fees charged for policy endorsements. Correct answer. A. Loans taken against the cash value of the policy. Explanation. In Michigan, policy loans allow policy owners to borrow funds against the cash value of their life insurance policies. The loan amount accrues interest and is typically subtracted from the death benefit if not repaid. Policy loans can provide financial flexibility but may reduce the death benefit if not managed effectively. Question 18. What rights do policy owners have regarding beneficiaries, assignment, or transfer of a life insurance policy? A. Policy owners can change beneficiaries, assign, or transfer the policy under specific conditions. B. Policy owners have no rights to make changes once the policy is issued. C. Changes to beneficiaries require approval from the insurance company. D. Assignment of the policy is only allowed upon death of the insured. Correct answer. A. Policy owners can change beneficiaries, assign, or transfer the policy under specific conditions. Explanation. In Michigan, policy owners have certain rights regarding their life insurance policies. They can change beneficiaries, assign the policy to another party, or transfer ownership under specific conditions outlined in the policy contract. These rights provide flexibility and allow policy owners to adapt their coverage based on changing circumstances. Question 19. What are annuity payout options, and which option provides payments for the lifetime of the annuitant only? A. Joint life with survivorship. B. Period certain. C. Life with period certain. D. Life only. Correct answer. D. Life only. Explanation. In Michigan, annuity payout options determine how payments are made to the annuitant. The life only option provides payments for the lifetime of the annuitant only. Once the annuitant passes away, payments cease, regardless of the total amount received. Question 20. What are the tax implications of annuity withdrawals and distributions? A. Withdrawals are always tax-free. B. Distributions are taxed as ordinary income. C. Tax credits are provided for annuity holders. D. Capital gains tax applies to all annuity payments. Correct answer. B. Distributions are taxed as ordinary income. Explanation. In Michigan, annuity withdrawals and distributions are typically taxed as ordinary income. Withdrawals made before reaching age 59.5 may also incur an additional 10% penalty tax unless certain exceptions apply. Annuity holders should consider these tax implications when planning withdrawals. Question 21. What are annuity surrender periods and surrender charges? A. Surrender periods are the duration during which annuity payments are made. B. Surrender periods refer to the time period when annuity contributions are made. C. Surrender charges are penalties for early withdrawals or surrender of an annuity. D. Surrender charges apply only to fixed annuities. Correct answer. C. Surrender charges are penalties for early withdrawals or surrender of an annuity. Explanation. In Michigan, annuity surrender periods are the duration during which surrender charges apply. Surrender charges are imposed by insurance companies to discourage early withdrawals or surrenders of annuity contracts. These charges typically decrease over time and may vary based on the annuity contract terms. Question 22. What are the beneficiary options available for annuity death benefits in Michigan? A. Only primary beneficiaries are allowed. B. Primary and contingent beneficiaries are both options. C. Beneficiaries must be immediate family members. D. Beneficiary options are not applicable for annuities in Michigan. Correct answer. B. Primary and contingent beneficiaries are both options. Explanation. In Michigan, annuity contracts allow for both primary and contingent beneficiaries to be designated. The primary beneficiary is the first in line to receive death benefits, while contingent beneficiaries receive benefits if the primary beneficiary is deceased or unable to receive the benefits. It's important for annuity holders to understand and designate beneficiaries based on their specific needs and circumstances. Question 23. What are the insurance licensing and continuing education requirements for agents in Michigan? A. Agents are not required to obtain a license in Michigan. B. Agents must complete pre-licensing education but not continuing education. C. Agents must obtain a license and complete continuing education requirements. D. Only out-of-state agents are exempt from licensing in Michigan. Correct answer. C. Agents must obtain a license and complete continuing education requirements. Explanation. In Michigan, individuals wishing to sell life and health insurance must obtain an insurance license from the Michigan Department of Insurance and Financial Services, DIFS. Agents are required to complete pre-licensing education and pass the state licensing exam. Additionally, licensed agents must fulfill continuing education requirements to maintain their license and stay updated on industry regulations and practices. Question 24. What role do state insurance departments play in Michigan? A. State insurance departments oversee federal regulations only. B. State insurance departments regulate insurance policies issued by federal agencies. C. State insurance departments enforce state-specific insurance laws and regulations. D. State insurance departments do not exist in Michigan. Correct answer. C. State insurance departments enforce state-specific insurance laws and regulations. Explanation. In Michigan, the Department of Insurance and Financial Services, DIFS, is responsible for regulating and enforcing state-specific insurance laws and regulations. State insurance departments oversee insurance practices within their jurisdiction, ensuring compliance with state laws to protect consumers and maintain the integrity of the insurance market. DIFS plays a crucial role in licensing insurance professionals, reviewing insurance policies, and handling consumer complaints related to insurance matters. Question 25. Which entity regulates insurance rates and forms in Michigan? A. Federal Trade Commission, FTC. B. Centers for Medicare and Medicaid Services, CMS. C. Michigan Department of Insurance and Financial Services, DIFS. D. Securities and Exchange Commission, SEC. Correct answer. C. Michigan Department of Insurance and Financial Services, DIFS. Explanation. In Michigan, the regulation of insurance rates and forms falls under the jurisdiction of the Michigan Department of Insurance and Financial Services, DIFS. DIFS oversees the insurance industry in the state, ensuring that insurance companies comply with state laws and regulations related to rates, forms, and policy provisions. This regulatory oversight is crucial to protect consumers and maintain fairness within the insurance marketplace. Question 26. What measures are implemented to prevent and detect insurance fraud in Michigan? A. Insurance companies are not required to report fraud in Michigan. B. Michigan Department of Health and Human Services manages fraud prevention. C. DIFS collaborates with law enforcement and industry stakeholders to combat fraud. D. Fraud prevention is solely managed by federal agencies in Michigan. Correct answer. C. DIFS collaborates with law enforcement and industry stakeholders to combat fraud. Explanation. In Michigan, the prevention and detection of insurance fraud are key priorities overseen by the Michigan Department of Insurance and Financial Services, DIFS. DIFS works closely with law enforcement agencies, insurance companies, and other stakeholders to investigate fraudulent activities, enforce penalties, and protect policyholders. Detecting and preventing fraud helps maintain the integrity of the insurance market and reduces financial losses for both insurers and consumers. Question 27. What ethical concern is associated with conflicts of interest in insurance sales and recommendations? A. Agents are encouraged to prioritize sales commissions over client needs. B. Disclosure of potential conflicts of interest is not required in Michigan. C. Agents should act in the best interest of clients and disclose any conflicts. D. Conflicts of interest are solely managed by federal ethics regulations. Correct answer. C. Agents should act in the best interest of clients and disclose any conflicts. Explanation. In Michigan, ethical conduct in insurance sales requires agents to prioritize the best interests of clients above all else. Agents must disclose any potential conflicts of interest that could impact their recommendations to clients, such as financial incentives or relationships with insurance providers. By promoting transparency and professionalism, agents uphold ethical standards and build trust with consumers, ensuring that insurance products align with clients' needs and objectives. Question 28. What ethical considerations are important in underwriting and claims handling for insurance in Michigan? A. Prioritizing high-risk applicants for premium increases. B. Providing preferential treatment based on personal relationships. C. Ensuring fairness and non-discrimination in underwriting and claims. D. Expediting claims processing for select policyholders. Correct answer. C. Ensuring fairness and non-discrimination in underwriting and claims. Explanation. In Michigan, ethical considerations in underwriting and claims handling emphasize the importance of fairness and non-discrimination. Insurance professionals must evaluate applicants based on risk factors relevant to insurance underwriting, ensuring that decisions are made objectively and without bias. Similarly, claims handling should prioritize prompt and equitable treatment for policyholders, adhering to ethical standards that uphold consumer trust and regulatory compliance. Question 29. What professional codes of conduct apply to insurance agents and brokers in Michigan? A. Uniform Commercial Code, UCC, regulations. B. National Association of Insurance Commissioners, NAIC, model rules. C. State-specific licensing requirements for insurance professionals. D. Financial Industry Regulatory Authority, FINRA, guidelines. Correct answer. C. State-specific licensing requirements for insurance professionals. Explanation. Insurance agents and brokers in Michigan are subject to state-specific licensing requirements, which include adherence to professional codes of conduct. These requirements are established by the Michigan Department of Insurance and Financial Services, DIFS, to ensure ethical behavior, consumer protection, and regulatory compliance within the insurance industry. Agents and brokers must uphold these standards to maintain their licenses and serve clients ethically. Question 30. What ethical issues are relevant in insurance marketing and advertising practices in Michigan? A. Misleading or deceptive advertising tactics. B. Exclusionary marketing campaigns targeting specific demographics. C. Minimal disclosure of policy terms and conditions in advertisements. D. Overstating benefits without providing accurate information. Correct answer. A. Misleading or deceptive advertising tactics. Explanation. Ethical issues in insurance marketing and advertising in Michigan revolve around avoiding misleading or deceptive tactics. Insurance professionals must ensure that marketing materials accurately represent policy features, benefits, and limitations to consumers. This includes transparently disclosing terms, conditions, and exclusions to avoid misunderstandings and maintain ethical standards in advertising practices. Question 31. What is a key aspect of health insurance that ensures policyholders have access to a network of healthcare providers and facilities? A. Deductible. B. Co-payment. C. Provider network. D. Premium. Correct answer. C. Provider network. Explanation. In Michigan, health insurance policies often include provider networks, which consist of healthcare providers and facilities that have contracted with the insurance company to provide services at discounted rates to policyholders. Accessing care within the provider network typically results in lower out-of-pocket costs for policyholders, making it an essential consideration when choosing a health insurance plan. Question 32. Which type of health insurance plan typically requires policyholders to select a primary care physician, PCP, and obtain referrals for specialist visits? A. Health Maintenance Organization, HMO. B. Preferred Provider Organization, PPO. C. Exclusive Provider Organization, EPO. D. Point of Service, POS, plan. Correct answer. A. Health Maintenance Organization, HMO. Explanation. HMOs are a common type of health insurance plan in Michigan that requires policyholders to choose a primary care physician, PCP, from within the plan's network. PCPs coordinate all of the patient's healthcare services and must provide referrals for visits to specialists within the network. This structure helps manage costs and ensures coordinated care for policyholders. Question 33. Which type of health insurance plan offers more flexibility in choosing healthcare providers and does not require referrals for specialist visits, but typically has higher out-of-pocket costs? A. Health Maintenance Organization, HMO. B. Preferred Provider Organization, PPO. C. Exclusive Provider Organization, EPO. D. Point of Service, POS, plan. Correct answer. B. Preferred Provider Organization, PPO. Explanation. PPOs in Michigan allow policyholders to visit any healthcare provider without requiring a referral from a primary care physician, PCP. PPOs offer flexibility in choosing providers both inside and outside the plan's network. While policyholders can see specialists directly, utilizing out-of-network providers often results in higher out-of-pocket costs compared to in-network services. Question 34. What is the purpose of coinsurance in a health insurance policy? A. It is the maximum amount the insured must pay out of pocket each year. B. It is the fixed amount the insured pays for covered services at the time of service. C. It is the percentage of covered expenses that the insured must pay after the deductible is met. D. It is the amount the insurer pays to the insured for medical expenses. Correct answer. C. It is the percentage of covered expenses that the insured must pay after the deductible is met. Explanation. Coinsurance refers to the percentage of covered medical expenses that the insured must pay after meeting the deductible. For example, if a policy has 20% coinsurance, after the deductible is satisfied, the insured pays 20% of covered expenses while the insurer pays the remaining 80%. This provision encourages cost sharing between the insured and the insurer. Question 35. Which health insurance provision defines the total amount that the insurer will pay for certain services or treatments? A. Deductible. B. Copayment. C. Coverage limit. D. Exclusion. Correct answer. C. Coverage limit. Explanation. Coverage limits are provisions in health insurance policies that specify the maximum amount the insurer will pay for certain services or treatments. These limits can apply to specific services, procedures, or overall annual or lifetime benefits. Understanding coverage limits is crucial for policyholders to assess their potential out-of-pocket costs. Question 36. What does the term exclusion refer to in a health insurance policy? A. The maximum amount the insured must pay out of pocket each year. B. The services or conditions that are not covered under the policy. C. The fixed amount the insured pays for covered services at the time of service. D. The percentage of covered expenses that the insured must pay after the deductible is met. Correct answer. B. The services or conditions that are not covered under the policy. Explanation. Exclusions are specific services, treatments, or conditions that are not covered under a health insurance policy. It is important for policyholders to review the policy exclusions to understand what medical services or conditions are not eligible for coverage. Exclusions help insurers manage risk and keep premiums affordable by excluding high-cost or non-essential services. Question 37. Which of the following best describes the underwriting process for health insurance? A. Evaluating the financial stability of the insurance company. B. Assessing the applicant's health status and determining insurability. C. Reviewing claims history to adjust premiums. D. Determining policy premium rates based on market trends. Correct answer: B. Assessing the applicant's health status and determining insurability. Explanation: the underwriting process for health insurance involves evaluating an applicant's health status, medical history, and other risk factors to determine insurability. Insurers assess the applicant's health conditions, lifestyle choices, and medical history to decide whether to offer coverage, at what premium rates, and with what limitations or exclusions. This process helps insurers manage risk and ensure fairness in pricing based on individual health risks. Question 38. Which of the following factors may affect an individual's insurability for health insurance? A. Home address and location. B. Annual income and employment status. C. Personal health history and pre-existing conditions. D. Number of dependents covered under the policy. Correct answer: C. Personal health history and pre-existing conditions. Explanation: an individual's personal health history and pre-existing conditions can significantly impact insurability for health insurance. Insurers consider these factors during the underwriting process to assess the level of risk associated with providing coverage. Certain health conditions or medical histories may lead to higher premiums, coverage limitations, or even denial of coverage depending on the severity and nature of the conditions. Question 39. What is the primary goal of risk selection and classification in insurance underwriting? A. Maximizing profits for the insurance company. B. Ensuring equitable access to insurance coverage. C. Identifying high-risk individuals for exclusion from coverage. D. Evaluating the financial stability of the insured individual. Correct answer: B. Ensuring equitable access to insurance coverage. Explanation: the primary goal of risk selection and classification in insurance underwriting is to ensure equitable access to insurance coverage for individuals while accurately assessing and pricing risk. By appropriately classifying risks based on factors like health status, lifestyle, and occupation, insurers can offer coverage to a diverse pool of applicants while maintaining financial stability. This process helps balance risk among policyholders and promotes fairness in insurance pricing. Question 40. Which of the following best describes state and federal regulations governing health insurance in Michigan? A. States have no role in regulating health insurance. It is solely governed by federal laws. B. State regulations primarily focus on employer-sponsored health plans, while federal regulations govern individual health insurance. C. Both state and federal regulations play a role in governing health insurance, with states having authority over certain aspects such as market conduct and consumer protection. D. Federal regulations are more lenient compared to state regulations when it comes to health insurance standards. Correct answer: C. Both state and federal regulations play a role in governing health insurance, with states having authority over certain aspects such as market conduct and consumer protection. Explanation: in Michigan, health insurance is subject to regulations at both the state and federal levels. States have authority over various aspects of health insurance, including market conduct, consumer protections, and insurance company licensing. Federal regulations, such as those under the Affordable Care Act, ACA, and HIPAA, provide additional standards and requirements that insurers must adhere to nationwide. Question 41. Which provisions of the Affordable Care Act, ACA, focus on expanding access to health insurance coverage? A. Provisions related to health savings accounts, HSAs, and flexible spending arrangements, FSAs. B. Requirements for essential health benefits and coverage for pre-existing conditions. C. Regulations governing Medicare and Medicaid reimbursement rates. D. Mandates for insurance company profits and executive compensation. Correct answer. B. Requirements for essential health benefits and coverage for pre-existing conditions. Explanation. The Affordable Care Act, ACA, includes provisions aimed at expanding access to health insurance coverage. Key components include requirements for essential health benefits, such as maternity care and mental health services, and prohibiting insurers from denying coverage or charging higher rates based on pre-existing conditions. These measures aim to ensure broader access to comprehensive health insurance coverage for individuals and families. Question 42. What do HIPAA regulations and privacy rules primarily address in the context of health insurance? A. Standards for electronic health records, EHRs, and interoperability. B. Regulations governing provider reimbursement rates. C. Protections for the privacy and security of individuals' health information. D. Guidelines for insurance agents' professional conduct and ethics. Correct answer. C. Protections for the privacy and security of individuals' health information. Explanation. HIPAA, Health Insurance Portability and Accountability Act, regulations and privacy rules primarily focus on protecting the privacy and security of individuals' health information. These rules establish standards for safeguarding patients' medical records and personal health information, ensuring that healthcare providers, insurers, and other entities handling health data comply with strict privacy requirements to protect patient confidentiality. Question 43. What are health insurance exchanges, as established under the Affordable Care Act, ACA? A. Private insurance companies offering specialized health plans. B. Government-operated platforms where individuals and small businesses can compare and purchase health insurance. C. Medicaid managed care organizations in specific states. D. Employer-sponsored health insurance programs. Correct answer. B. Government-operated platforms where individuals and small businesses can compare and purchase health insurance. Explanation. Health insurance exchanges, also known as marketplaces, are government-operated platforms established under the Affordable Care Act, ACA. They allow individuals, families, and small businesses to compare and purchase health insurance plans from private insurers. These exchanges offer a range of health plan options, including different coverage levels and pricing, and provide information about subsidies and financial assistance based on income. Question 44. What is an enrollment period in the context of health insurance marketplaces? A. A period during which individuals can enroll in Medicare Part A and B. B. A specific time frame when individuals can sign up for health insurance coverage through a marketplace. C. The annual open enrollment period for employer-sponsored health plans. D. A period during which Medicaid eligibility is assessed. Correct answer. B. A specific time frame when individuals can sign up for health insurance coverage through a marketplace. Explanation. An enrollment period refers to a specific time frame designated for individuals to sign up for health insurance coverage through a marketplace. The enrollment period allows individuals to select a plan that best suits their needs and circumstances. Outside of the annual open enrollment period, individuals may qualify for special enrollment periods based on certain life events, such as marriage, birth of a child, or loss of other coverage. Question 45. What do subsidies and premium tax credits provide for individuals purchasing health insurance through a marketplace? A. Assistance in paying for prescription drugs and medical services. B. Discounts on gym memberships and wellness programs. C. Financial assistance to help lower monthly premiums and out-of-pocket costs. D. Coverage for dental and vision care services. Correct answer. C. financial assistance to help lower monthly premiums and out-of-pocket costs. Explanation: subsidies and premium tax credits are forms of financial assistance provided to eligible individuals purchasing health insurance through a marketplace. These subsidies help lower monthly premiums and out-of-pocket costs, making health insurance more affordable for individuals and families with lower incomes. Eligibility for subsidies and tax credits is based on income and household size, and they are designed to make health insurance coverage accessible to a broader population. Question 46. What defines a managed care organization, MCO, in the context of health insurance? A. An organization that provides Medicare Advantage plans. B. A system of healthcare delivery designed to manage costs and quality of care by controlling access to providers and services. C. Nonprofit organizations that administer Medicaid programs. D. Private insurance companies that offer individual health plans. Correct answer: B. A system of healthcare delivery designed to manage costs and quality of care by controlling access to providers and services. Explanation: a managed care organization, MCO, is a healthcare delivery system that aims to manage costs and ensure quality of care by controlling access to healthcare providers and services. MCOs typically negotiate contracts with providers to create a network of healthcare professionals and facilities that members can access. They use various techniques such as utilization review and provider incentives to promote cost-effective care while maintaining quality standards. Question 47. What is the primary function of network structures and provider contracting in managed care organizations, MCOs? A. To limit access to healthcare services. B. To establish exclusive contracts with pharmaceutical companies. C. To create a network of healthcare providers who agree to deliver services at discounted rates. D. To increase administrative costs for healthcare facilities. Correct answer: C. To create a network of healthcare providers who agree to deliver services at discounted rates. Explanation: network structures and provider contracting are essential functions of managed care organizations, MCOs. MCOs negotiate contracts with healthcare providers to create a network of professionals and facilities that offer services at discounted rates to members of the plan. This allows MCOs to control costs and ensure that members receive care within the established network, promoting cost-effective healthcare delivery. Question 48. What is utilization review in the context of managed care techniques? A. A process to determine if a medical procedure is necessary and appropriate. B. A method to increase patient referrals to specialists. C. A technique to limit access to preventive care services. D. A strategy to reduce provider reimbursements for services rendered. Correct answer: A. A process to determine if a medical procedure is necessary and appropriate. Explanation: utilization review is a managed care technique used to evaluate the necessity and appropriateness of medical services and procedures. It involves reviewing healthcare services to ensure that they are medically necessary, cost-effective, and aligned with established guidelines. Utilization review helps manage healthcare utilization by assessing the clinical necessity of treatments and procedures before they are performed, thereby controlling costs and improving quality of care. Question 49. What is the primary purpose of claims processing and adjudication in health insurance? A. To deny all claims submitted by policyholders. B. To determine the coverage and eligibility of medical services for reimbursement. C. To delay payments to healthcare providers. D. To increase administrative costs for insurance companies. Correct answer: B. To determine the coverage and eligibility of medical services for reimbursement. Explanation: claims processing and adjudication in health insurance involve reviewing submitted claims to determine the coverage and eligibility of medical services for reimbursement. This process ensures that healthcare services rendered align with the policy provisions and guidelines. Claims adjudication includes verifying the accuracy of claims, checking policy coverage, and processing payments to healthcare providers based on the terms of the insurance policy. Question 50. What information is typically included in an explanation of benefits, EOB, or claims statement provided to policyholders? A. Instructions for filing future claims. B. Marketing materials for additional insurance products. C. Details of the healthcare services rendered, coverage provided, and amount paid by the insurance company. D. General health advice and wellness tips. Correct answer. C. Details of the healthcare services rendered, coverage provided, and amount paid by the insurance company. Explanation. An explanation of benefits, EOB, or claims statement provided to policyholders contains detailed information about the healthcare services rendered, coverage provided under the policy, and the amount paid by the insurance company. It outlines the claim processing outcome, including any deductibles, coinsurance, or copayments applicable to the policyholder. The EOB helps policyholders understand how their insurance benefits were applied to specific medical services. Question 51. What role does fraud prevention and detection play in health insurance claims processing? A. To encourage policyholders to submit more claims. B. To reduce administrative tasks for insurance companies. C. To identify and prevent fraudulent activities related to claims submissions. D. To increase premiums for policyholders. Correct answer. C. To identify and prevent fraudulent activities related to claims submissions. Explanation. Fraud prevention and detection are critical components of health insurance claims processing. Insurance companies employ various measures to identify and prevent fraudulent activities, such as false claims, billing for services not rendered, or misrepresentation of healthcare providers. Fraud detection helps protect the integrity of the insurance system and ensures that policyholders receive fair and legitimate coverage under their insurance plans. Question 52. What ethical considerations should insurance agents prioritize in health insurance sales and service? A. Maximize commissions by selling unnecessary policies. B. Provide accurate and transparent information to clients. C. Pressure clients into purchasing high-premium plans. D. Conceal policy limitations and exclusions from clients. Correct answer. B. Provide accurate and transparent information to clients. Explanation. Insurance agents should prioritize ethical considerations by providing accurate, transparent, and unbiased information to clients during health insurance sales and service. This includes disclosing policy terms, coverage details, limitations, and potential exclusions to ensure that clients make informed decisions based on their needs and preferences. Question 53. What rights and protections do consumers have in relation to health insurance policies? A. No rights or protections under state or federal law. B. Right to timely access to policy documents after purchase. C. Right to cancel a policy without reason after 90 days. D. Protection against unfair claims denials and discriminatory practices. Correct answer. D. Protection against unfair claims denials and discriminatory practices. Explanation. Consumers have important rights and protections under state and federal law related to health insurance policies. These protections include safeguards against unfair claims denials, discriminatory practices based on health status or pre-existing conditions, and the right to appeal adverse coverage decisions. Consumers also have the right to access clear and understandable policy documents at the time of purchase. Question 54. What constitutes fair marketing and sales practices in the context of health insurance? A. Misleading advertisements and deceptive sales tactics. B. Providing accurate and honest information to potential clients. C. Offering discounts and incentives for policy purchases. D. Pushing clients to purchase unnecessary coverage. Correct answer. B. Providing accurate and honest information to potential clients. Explanation. Fair marketing and sales practices in health insurance involve providing accurate, honest, and non-deceptive information to potential clients. Agents should avoid misleading advertisements, deceptive sales tactics, or pressuring individuals into purchasing coverage that may not be suitable for their needs. Fair practices promote transparency and trust between insurance professionals and consumers. Question 55. Which supplemental health insurance product typically covers expenses related to routine dental checkups, cleanings, and basic dental procedures? A. Vision insurance. B. Disability insurance. C. Dental insurance. D. Critical illness insurance. Correct answer. C. Dental insurance. Explanation. Dental insurance is a type of supplemental health insurance that covers expenses associated with routine dental care, such as preventive services, e.g., checkups, cleanings, basic procedures, e.g., fillings, and sometimes major dental work, e.g., crowns, root canals. This coverage helps policyholders manage the costs of maintaining good oral health. Question 56. What are optional policy riders and endorsements in health insurance? A. Additional coverage options that can be added to a base policy for an extra premium. B. Mandated coverage requirements by state law. C. Discounts provided to policyholders based on healthy lifestyle choices. D. A feature that limits coverage to specific medical providers. Correct answer. A. Additional coverage options that can be added to a base policy for an extra premium. Explanation. Optional policy riders and endorsements refer to additional coverage options that can be added to a base health insurance policy for an extra premium. These riders customize the policy to meet specific needs or preferences of the insured, such as adding coverage for certain medical conditions, increasing benefit limits, or providing coverage for alternative therapies. Question 57. Which type of insurance product is designed to provide financial support in the event of a serious illness, such as cancer or heart disease? A. Disability insurance. B. Vision insurance. C. Critical illness insurance. D. Long-term care insurance. Correct answer. C. Critical illness insurance. Explanation. Critical illness insurance is a specific type of insurance product that pays a lump sum benefit upon diagnosis of a covered serious illness, such as cancer, heart attack, or stroke. This benefit is paid regardless of whether the insured continues working or has other health insurance coverage. It helps policyholders cover out-of-pocket medical expenses, transportation costs, or other financial needs during recovery. Question 58. Which of the following statements is true regarding the tax implications of health insurance premiums and benefits? A. Health insurance premiums paid by employers are deductible for the employer but not for the employee. B. Health insurance premiums paid by individuals are always fully deductible from their federal income tax. C. Health insurance benefits received by an individual through an employer's group health plan are generally tax-free. D. Health insurance benefits received by an individual are always subject to federal income tax. Correct answer. C. Health insurance benefits received by an individual through an employer's group health plan are generally tax-free. Explanation. Under federal tax law, health insurance benefits received by an individual through an employer's group health plan are typically tax-free. This means that the value of the employer-sponsored health coverage is excluded from the employee's gross income for federal income tax purposes. However, there may be certain exceptions and limitations based on specific circumstances and plan types. Question 59. Which IRS regulation governs the compliance requirements related to employer-sponsored health plans? A. Internal Revenue Code, IRC, Section 401K. B. IRC Section 125. C. IRC Section 179. D. IRC Section 213. Correct answer. B. IRC Section 125. Explanation. IRC Section 125, also known as the Cafeteria Plan or Flexible Benefits Plan, governs the compliance requirements for employer-sponsored health plans. This section outlines the rules for offering employees a choice between taxable cash compensation and certain qualified benefits, including health insurance, on a pre-tax basis. Compliance with IRC Section 125 ensures that employers meet the tax requirements associated with offering these benefits to employees. Question 60. Which of the following is a reporting requirement for insurers and policyholders related to health insurance? A. Issuing Form W-2 to employees showing health insurance premiums paid by the employer. B. Filing Form 1095-A to report coverage through the health insurance marketplace. C. Submitting Form 1040 to claim deductions for health insurance premiums paid. D. Reporting health insurance benefits received on Form 8863. Correct answer. B. Filing Form 1095-A to report coverage through the health insurance marketplace. Explanation. Insurers and policyholders have reporting requirements related to health insurance coverage. Insurers are required to file Form 1095-A to report coverage provided through the health insurance marketplace. This form provides important information about the coverage, including the dates of coverage and the amount of any premium tax credit received. Policyholders may use this information when filing their federal income tax return to reconcile advance payments of the premium tax credit. Question 61. Which of the following statements accurately describes telemedicine and remote healthcare services? A. Telemedicine services are not covered by health insurance due to privacy concerns. B. Telemedicine allows patients to receive medical care remotely through electronic communication technologies. C. Remote healthcare services are only available to individuals residing in rural areas. D. Value-based care models exclude the use of telemedicine. Correct answer. B. Telemedicine allows patients to receive medical care remotely through electronic communication technologies. Explanation. Telemedicine refers to the provision of healthcare services remotely using telecommunications technology, such as video calls or secure messaging. It enables patients to consult with healthcare providers without physically visiting a medical facility. Many health insurance plans cover telemedicine services, especially as technological advancements have made remote healthcare more accessible and convenient. Question 62. What is a key characteristic of value-based care models in the context of health insurance? A. Value-based care models prioritize quantity of services over quality of care. B. Value-based care models focus on reducing patient engagement in their own healthcare decisions. C. Value-based care models emphasize achieving better health outcomes for patients while controlling costs. D. Value-based care models are primarily fee-for-service arrangements. Correct answer. C. Value-based care models emphasize achieving better health outcomes for patients while controlling costs. Explanation. Value-based care models aim to shift the focus from volume-based care, fee-for-service, to quality-based care. These models encourage healthcare providers to deliver high-quality care that leads to better patient outcomes while controlling unnecessary costs. By incentivizing positive health outcomes, value-based care models align the interests of patients, providers, and insurers toward improving overall healthcare quality. Question 63. Which technological innovation has contributed significantly to healthcare delivery and insurance processes? A. Blockchain technology for secure patient records management. B. Traditional paper-based medical records for easy accessibility. C. Limiting access to electronic health records, EHRs, for patient privacy. D. Reliance on outdated manual processes for claims processing. Correct answer. A. Blockchain technology for secure patient records management. Explanation. Blockchain technology offers a secure and decentralized way to manage electronic health records, EHRs, and insurance claims. It ensures the integrity and privacy of patient data by using cryptographic techniques and distributed ledger systems. Blockchain can streamline insurance processes, reduce fraud, and enhance data security, making it an innovative solution that has the potential to transform healthcare delivery and insurance practices. Question 64. Which of the following statements accurately describes term life insurance policies? A. Term life insurance policies provide coverage for the insured's entire lifetime. B. Term life insurance policies accumulate cash value over time. C. Term life insurance policies offer coverage for a specific period, such as 10, 20, or 30 years. D. Term life insurance policies have flexible premium payments. Correct answer. C. Term life insurance policies offer coverage for a specific period, such as 10, 20, or 30 years. Explanation. Term life insurance policies provide coverage for a predetermined period or term, such as 10, 20, or 30 years. If the insured passes away during the term of the policy, the beneficiary receives the death benefit. Term life insurance does not accumulate cash value like permanent life insurance policies such as whole life or universal life. Premium payments for term life insurance are typically fixed for the duration of the term and are generally more affordable compared to permanent life insurance. Question 65. What distinguishes universal life insurance policies from other types of life insurance? A. Universal life insurance policies have a fixed premium amount. B. Universal life insurance policies offer flexible death benefits. C. Universal life insurance policies allow policyholders to adjust their premium payments and death benefits. D. Universal life insurance policies do not require medical underwriting. Correct answer. C. Universal life insurance policies allow policyholders to adjust their premium payments and death benefits. Explanation. Universal life insurance policies provide flexibility to policyholders in terms of premium payments and death benefits. Policyholders can adjust the amount and timing of premium payments, subject to certain conditions. Additionally, they have the ability to modify the death benefit over time to accommodate changes in financial circumstances or needs. This flexibility distinguishes universal life insurance from other types of life insurance, making it suitable for individuals seeking more control over their policy. Question 66. What feature is characteristic of whole life insurance policies? A. Whole life insurance policies provide coverage for a specific term. B. Whole life insurance policies do not have a cash value component. C. Whole life insurance policies have fixed premiums for the duration of the policyholder's life. D. Whole life insurance policies do not pay out a death benefit to beneficiaries. Correct answer. C. Whole life insurance policies have fixed premiums for the duration of the policyholder's life. Explanation. Whole life insurance policies offer coverage for the entire life of the insured, provided that premiums are paid as required. One key feature of whole life insurance is the fixed premium amount, which remains constant throughout the policyholder's life. Additionally, whole life policies accumulate cash value over time, allowing policyholders to access this cash value through policy loans or withdrawals. The death benefit of a whole life policy is guaranteed and paid out to beneficiaries upon the insured's death, making it a popular choice for individuals seeking permanent life insurance coverage. Question 67. What distinguishes variable life insurance policies from traditional whole life insurance? A. Variable life insurance policies offer fixed premium payments. B. Variable life insurance policies have a guaranteed death benefit. C. Variable life insurance policies allow policyholders to allocate premiums into investment accounts. D. Variable life insurance policies do not have a cash value component. Correct answer. C. Variable life insurance policies allow policyholders to allocate premiums into investment accounts. Explanation. Variable life insurance policies provide policyholders with the opportunity to allocate a portion of their premium payments into separate investment accounts, often referred to as sub-accounts or separate accounts. The performance of these investment accounts can affect the cash value accumulation and ultimately the death benefit of the policy. This feature distinguishes variable life insurance from traditional whole life insurance, which typically offers fixed premium payments and guarantees a minimum death benefit. Question 68. Which type of insurance policy is specifically designed to cover funeral and burial expenses? A. Term life insurance policies. B. Universal life insurance policies. C. Whole life insurance policies. D. Final expense insurance policies. Correct answer. D. Final expense insurance policies. Explanation. Final expense insurance policies, also known as burial insurance or funeral insurance, are specifically designed to cover the costs associated with funeral and burial expenses. These policies are typically smaller in face value compared to traditional life insurance policies and are intended to provide financial assistance to beneficiaries for end-of-life expenses. Final expense insurance policies are often easier to qualify for and may be appealing to individuals who want to ensure that their funeral costs are covered without burdening their loved ones. Question 69. What does an accidental death benefit rider provide to a life insurance policy? A. Additional coverage for death due to specific types of accidents. B. Cash value accumulation over time. C. Waiver of premium payments in case of disability. D. Guaranteed interest rate on the policy's cash value. Correct answer. A. Additional coverage for death due to specific types of accidents. Explanation. An accidental death benefit rider is a policy provision that provides additional coverage in the event of death resulting from specific types of accidents, such as car accidents or falls. If the insured's death is deemed accidental and covered by the rider, the beneficiary receives an additional benefit in addition to the policy's regular death benefit. This rider can be a valuable addition to a life insurance policy for individuals concerned about accidental death and its financial implications for their loved ones. Question 70. Which type of rider provides coverage for specified critical illnesses, such as cancer or heart attack? A. Long-term care insurance rider. B. Disability income rider. C. Critical illness rider. D. Term life insurance rider. Correct answer. C. Critical illness rider. Explanation. A critical illness rider is designed to provide coverage for specific critical illnesses, such as cancer, heart attack, stroke, or organ transplant. If the insured is diagnosed with a covered critical illness during the policy term, a lump sum benefit is paid out to help cover medical expenses or other financial needs. This rider enhances the financial protection offered by the life insurance policy, addressing the significant costs associated with critical illnesses. Question 71. Which rider provides periodic payments to the insured if they become disabled and are unable to work? A. Long-term care insurance rider. B. Disability income rider. C. Accidental death benefit rider. D. Accelerated death benefit rider. Correct answer. B. Disability income rider. Explanation. A disability income rider provides periodic payments to the insured if they become disabled due to illness or injury and are unable to work. The rider helps replace lost income during the disability period, ensuring financial stability for the insured and their family. This rider can be crucial for individuals who rely on their income to meet financial obligations and expenses. Question 72. What type of rider provides coverage for services needed for daily living activities, such as bathing and dressing? A. Long-term care insurance rider. B. Critical illness rider. C. Accidental death benefit rider. D. Term life insurance rider. Correct answer. A. Long-term care insurance rider. Explanation. A long-term care insurance rider provides coverage for services needed for daily living activities, such as bathing, dressing, and eating, either at home or in a facility. This rider is designed to help cover the costs of long-term care services that may not be covered by health insurance or Medicare. It can provide financial assistance to policyholders who require extended care due to aging, illness, or injury. Question 73. What type of rider provides additional term life insurance coverage on a spouse or child? A. Spousal or child term rider. B. Accelerated death benefit rider. C. Disability income rider. D. Critical illness rider. Correct answer. A. Spousal or child term rider. Explanation. A spousal or child term rider is an optional addition to a life insurance policy that provides additional term life insurance coverage on a spouse or child of the insured. This rider allows the insured to extend life insurance protection to their family members within the same policy. It typically offers a specified amount of coverage for a specific term, often aligned with the primary insured's policy term. Question 74. Which of the following is a common risk assessment tool used in the underwriting process for different types of insurance? A. Genetic testing. B. Utilization review. C. Actuarial tables. D. Property appraisal. Correct answer. C. Actuarial tables. Explanation. Actuarial tables are statistical tools used in the underwriting process for various types of insurance, including life, health, property, and liability insurance. These tables are based on large sets of historical data and provide insights into mortality risk, health status, life expectancy, and other factors relevant to insurance underwriting. Actuarial tables help underwriters assess risk accurately and determine appropriate premiums and coverage. Question 75. What is a key component of the underwriting process for health insurance policies? A. Loss ratio analysis. B. Risk classification. C. Pre-existing condition exclusion. D. Credit score assessment. Correct answer. B. Risk classification. Explanation. Risk classification is a fundamental component of the underwriting process for health insurance policies. Underwriters assess the risk associated with each applicant based on factors such as age, health history, lifestyle, and pre-existing conditions. Risk classification helps insurers determine the appropriate premium rates and coverage options for individual policyholders, ensuring a fair and equitable distribution of risk across insured populations. Question 76. In life insurance underwriting, what is the primary purpose of using actuarial tables and mortality tables? A. To determine the policy benefits. B. To calculate the surrender value of the policy. C. To assess mortality risk and set appropriate premiums. D. To determine the policy loan interest rate. Correct answer. C. To assess mortality risk and set appropriate premiums. Explanation. Actuarial tables and mortality tables are essential tools used by underwriters to assess mortality risk associated with life insurance policies. These tables provide statistical data on life expectancy, mortality rates, and other factors affecting longevity. Underwriters use this information to set appropriate premiums based on the insured's age, health status, and other relevant factors. The goal is to ensure that the premiums charged reflect the level of risk assumed by the insurer, making actuarial tables a critical component of life insurance underwriting. Question 77. What role does underwriting play in determining policy premiums and coverage? A. Underwriting ensures timely claims processing. B. Underwriting determines the surrender value of the policy. C. Underwriting assesses risk and sets premiums and coverage limits. D. Underwriting facilitates policy owner rights. Correct answer. C. Underwriting assesses risk and sets premiums and coverage limits. Explanation. Underwriting is the process of evaluating the risk associated with insuring a particular individual or entity. In life and health insurance, underwriters assess factors such as age, health history, lifestyle, occupation, and medical conditions to determine the level of risk. Based on this assessment, underwriters set appropriate premiums and coverage limits. The goal of underwriting is to ensure that the insurer can adequately cover potential claims while maintaining a financially sustainable business model. Question 78. Which type of life insurance policy allows for cash value accumulation over time? A. Term life insurance. B. Variable life insurance. C. Group life insurance. D. Universal life insurance. Correct answer. D. Universal life insurance. Explanation. Universal life insurance is a type of permanent life insurance that offers cash value accumulation over time. Part of the premium paid by the policyholder goes towards building cash value, which earns interest at a specified rate set by the insurer. This cash value can be accessed by the policyholder through withdrawals or policy loans. Universal life insurance provides flexibility in premium payments and coverage amounts, making it a popular choice for individuals seeking both life insurance protection and cash value accumulation. Question 79. What are surrender charges in life insurance policies, and what do they typically apply to? A. Charges incurred when changing beneficiaries. B. Penalties for early policy termination or cash surrender. C. Additional premiums for policy endorsements. D. Fees for policy loans. Correct answer. B. Penalties for early policy termination or cash surrender. Explanation. Surrender charges are fees imposed by insurance companies for terminating a life insurance policy prematurely or surrendering it for its cash value before a specified period, such as the surrender period. These charges are designed to cover administrative costs and ensure that policyholders maintain their policies for the intended duration. Surrender charges typically decrease over time and may vary based on the specific terms of the policy and state regulations. Question 80. What are policy loans in life insurance, and what implications do they have for policyholders? A. Loans obtained to pay policy premiums. B. Loans borrowed against the cash value of a life insurance policy. C. Loans for policy endorsements. D. Loans used to pay beneficiaries. Correct answer. B. Loans borrowed against the cash value of a life insurance policy. Explanation. Policy loans allow policyholders to borrow funds against the cash value of their life insurance policy. The loan amount is secured by the policy's cash value and accrues interest, which is typically charged at a predetermined rate. Policy loans can provide policyholders with access to funds for various purposes, such as emergencies or financial needs, without surrendering the policy. However, unpaid policy loans can reduce the death benefit and cash value of the policy if not repaid. Question 81. Which of the following rights does a policy owner typically have regarding their life insurance policy? A. Change beneficiaries and policy endorsements. B. Obtain policy loans and pay premiums. C. Assign or transfer the policy to another individual. D. All of the above. Correct answer. D. All of the above. Explanation. Policy owners typically have various rights regarding their life insurance policy, including the ability to change beneficiaries, obtain policy loans against the cash value, assign or transfer the policy to another individual, and make other policy changes or endorsements. These rights provide flexibility and control to policyholders over their life insurance coverage and financial planning needs. Question 82. What are annuity surrender periods and surrender charges? A. The period during which annuity payments are made to the beneficiary. B. The time frame when annuity withdrawals are not permitted without a penalty. C. Options for annuity payouts, such as life only or joint life. D. Tax implications of annuity withdrawals. Correct answer. B. The time frame when annuity withdrawals are not permitted without a penalty. Explanation. Annuity surrender periods refer to the duration after purchasing an annuity during which withdrawals or surrenders may incur penalties, known as surrender charges. During this period, annuity holders may face fees if they withdraw more than a certain amount or terminate the annuity. Surrender charges vary depending on the annuity contract and typically decrease over time. Question 83. What are the tax implications of annuity withdrawals and distributions? A. Tax-free withdrawals at any time. B. Tax-deferred growth on earnings until withdrawn. C. Taxable withdrawals subject to ordinary income tax and potential penalties. D. Tax-deductible contributions to the annuity account. Correct answer. C. Taxable withdrawals subject to ordinary income tax and potential penalties. Explanation. Annuity withdrawals and distributions are generally subject to ordinary income tax on the earnings portion. If withdrawals are made before age 59 and a half, they may also incur a 10% IRS penalty unless an exception applies. Annuities provide tax-deferred growth, meaning earnings are not taxed until they are withdrawn. Question 84. What are annuity payout options, and which one provides payments for the lifetime of the annuitant? A. Period certain annuity. B. Joint life annuity. C. Life only annuity. D. Fixed period annuity. Correct answer. C. Life only annuity. Explanation. An annuity payout option that provides payments for the lifetime of the annuitant is known as a life only annuity. With this option, payments continue until the annuitant's death, regardless of how long that may be. Other annuity payout options, such as joint life, period certain, or fixed period annuities, have different payment structures and durations. Question 85. What are annuity death benefits, and which beneficiary option provides ongoing payments to a beneficiary for a specific period? A. Lump sum payment to the beneficiary. B. Period certain option. C. Life income option. D. Joint and survivor option. Correct answer. B. Period certain option. Explanation. Annuity death benefits refer to the payments made to the beneficiary upon the death of the annuity holder. The period certain option allows beneficiaries to receive payments for a specified period, even if the annuitant passes away before the end of that period. This option provides a guaranteed income stream to the beneficiary for a predetermined duration. Question 86. What are the insurance licensing and continuing education requirements for agents in Michigan? A. Agents must renew their licenses annually with no continuing education requirements. B. Agents must complete pre-licensing education and pass an exam, followed by ongoing continuing education requirements. C. Agents are exempt from licensing and education requirements in Michigan. D. Licensing requirements vary by county within Michigan. Correct answer. B. Agents must complete pre-licensing education and pass an exam, followed by ongoing continuing education requirements. Explanation. In Michigan, insurance agents must complete pre-licensing education, pass a licensing exam, and renew their licenses periodically. Additionally, agents are required to fulfill continuing education requirements to stay updated on industry practices, regulations, and products. Question 87. What role do state insurance departments play in regulating the insurance industry in Michigan? A. State insurance departments oversee federal insurance laws only. B. State insurance departments enforce local city ordinances related to insurance. C. State insurance departments regulate insurance companies, agents, and policies within the state. D. State insurance departments focus solely on health insurance regulations. Correct answer. C. State insurance departments regulate insurance companies, agents, and policies within the state. Explanation. State insurance departments in Michigan are responsible for regulating insurance activities within the state. This includes licensing and oversight of insurance companies, agents, and policies to ensure compliance with state laws and regulations. State insurance departments play a critical role in consumer protection and maintaining the integrity of the insurance market. Question 88. What is the role of state insurance regulators in regulating insurance rates and forms in Michigan? A. State insurance regulators set insurance rates independently without federal oversight. B. State insurance regulators review and approve insurance rates and forms to ensure fairness and transparency. C. State insurance regulators have no authority over insurance rates and forms in Michigan. D. Insurance rates and forms in Michigan are solely regulated by federal agencies. Correct answer. B. State insurance regulators review and approve insurance rates and forms to ensure fairness and transparency. Explanation. In Michigan, state insurance regulators play a crucial role in overseeing insurance rates and forms. They review proposed rates and policy forms submitted by insurance companies to ensure they are fair, non-discriminatory, and compliant with state laws. This oversight helps protect consumers and maintain a stable insurance market within the state. Question 89. How do insurance companies and agents in Michigan contribute to the prevention and detection of insurance fraud? A. Insurance companies and agents have no role in fraud prevention and detection. B. Insurance companies use advanced algorithms to detect fraud automatically. C. Insurance companies and agents report suspicious activities to state authorities and cooperate in investigations. D. Insurance companies rely solely on federal agencies for fraud prevention efforts. Correct answer. C. Insurance companies and agents report suspicious activities to state authorities and cooperate in investigations. Explanation. Insurance companies and agents in Michigan actively participate in fraud prevention efforts. They are trained to identify red flags and suspicious activities, which are promptly reported to state authorities. Cooperation between insurers, agents, and law enforcement agencies helps combat insurance fraud, protecting both policyholders and the industry. Question 90. What constitutes a conflict of interest in insurance sales and recommendations? A. Offering clients a range of insurance options to choose from. B. Recommending insurance products based on client needs and preferences. C. Receiving undisclosed compensation for promoting specific insurance products. D. Adhering to ethical guidelines and regulations set by federal agencies. Correct answer. C. Receiving undisclosed compensation for promoting specific insurance products. Explanation. A conflict of interest occurs in insurance sales when an agent or broker receives undisclosed compensation, incentives, or benefits for recommending specific insurance products to clients. This practice can lead to biased advice and undermine the integrity of the sales process. Ethical conduct requires transparency and disclosure of any potential conflicts of interest to clients. Question 91. What are some ethical considerations in underwriting and claims handling for insurance professionals in Michigan? A. Denying claims without proper investigation. B. Ensuring fair treatment of all policyholders regardless of risk factors. C. Charging higher premiums based on discriminatory factors. D. Providing biased recommendations to policyholders. Correct answer. B. Ensuring fair treatment of all policyholders regardless of risk factors. Explanation. In Michigan, insurance professionals must adhere to ethical guidelines in underwriting and claims handling. This includes treating all policyholders fairly and objectively, regardless of their risk factors. Denying claims without proper investigation or using discriminatory factors to set premiums would be unethical and against industry standards. Question 92. What professional codes of conduct apply to insurance agents and brokers in Michigan? A. Uniform Commercial Code, UCC. B. National Association of Insurance Commissioners, NAIC, Model Regulations. C. Securities and Exchange Commission, SEC, Rules. D. Internal Revenue Code, IRC. Correct answer. B. National Association of Insurance Commissioners, NAIC, Model Regulations. Explanation. Insurance agents and brokers in Michigan are governed by professional codes of conduct set forth by the National Association of Insurance Commissioners, NAIC. These regulations establish standards for ethical behavior, disclosure requirements, and fair dealing with clients. Adhering to these codes is essential for maintaining professionalism and trust in the industry. Question 93. What are some ethical issues that insurance professionals should be aware of in marketing and advertising in Michigan? A. Making false or misleading statements about insurance products. B. Offering discounts to preferred customers. C. Using aggressive sales tactics without client consent. D. Providing accurate and transparent information to consumers. Correct answer. A. Making false or misleading statements about insurance products. Explanation. Insurance professionals in Michigan must avoid making false or misleading statements about insurance products in their marketing and advertising efforts. This includes ensuring that all information presented to consumers is accurate, transparent, and not intended to deceive or manipulate. Ethical marketing practices help maintain consumer trust and confidence in the insurance industry. Question 94. What is a key characteristic of health insurance in Michigan? A. It provides coverage only for catastrophic events. B. It covers preventive care and routine medical services. C. It excludes coverage for prescription drugs. D. It is only available through employer-sponsored plans. Correct answer. B. It covers preventive care and routine medical services. Explanation. Health insurance in Michigan, like in most states, typically covers preventive care and routine medical services. This includes vaccinations, annual checkups, and screenings to promote overall health and wellness. Understanding these coverage basics is important for policyholders and insurance professionals alike. Question 95. Which type of health insurance plan in Michigan typically requires members to select a primary care physician, PCP, and obtain referrals for specialist visits? A. Health Maintenance Organization, HMO. B. Preferred Provider Organization, PPO. C. Exclusive Provider Organization, EPO. D. Point of Service, POS, plan. Correct answer. A. Health Maintenance Organization, HMO. Explanation. An HMO plan in Michigan requires members to choose a primary care physician, PCP, who manages their healthcare needs and provides referrals for specialist consultations or services. This structure helps coordinate care and control costs within the network of healthcare providers associated with the HMO. Question 96. What distinguishes a preferred provider organization, PPO, from other health insurance plans in Michigan? A. It requires members to use out-of-network providers exclusively. B. It offers the most comprehensive coverage with no deductibles. C. It allows members to seek care from out-of-network providers at a higher cost. D. It limits coverage to specific healthcare facilities. Correct answer. C. It allows members to seek care from out-of-network providers at a higher cost. Explanation. A PPO plan in Michigan provides flexibility by allowing members to receive care from both in-network and out-of-network providers. However, using out-of-network providers typically results in higher out-of-pocket costs for the member. This feature distinguishes PPOs from HMOs and other types of health insurance plans. Question 97. Which of the following is an example of a common policy provision in health insurance? A. Dependent coverage until age 25. B. Coverage for cosmetic surgery. C. Payment of benefits directly to the insured. D. Coordination of benefits clause. Correct answer. D. Coordination of benefits clause. Explanation. A coordination of benefits (COB) clause is a common policy provision in health insurance that helps determine which insurance plan will pay first when a person is covered under more than one health insurance plan. This provision helps prevent overpayment of claims and ensures appropriate payment by insurers. Question 98. What is the purpose of coinsurance in health insurance policies? A. To determine the maximum benefit payable per policy year. B. To specify the amount the insured must pay before the insurance begins to cover expenses. C. To share costs between the insured and the insurer after the deductible is met. D. To exclude coverage for certain pre-existing conditions. Correct answer. C. To share costs between the insured and the insurer after the deductible is met. Explanation. Coinsurance is the percentage of costs shared between the insured and the insurer after the deductible has been met. For example, if the coinsurance rate is 80/20, the insurance company pays 80% of covered expenses, and the insured pays the remaining 20%. Question 99. Which of the following is typically considered a coverage limit in health insurance policies? A. Annual deductible amount. B. Lifetime maximum benefit. C. Prescription drug copayment. D. Provider network size. Correct answer. B. Lifetime maximum benefit. Explanation. A lifetime maximum benefit is a coverage limit that specifies the total amount of benefits the insurer will pay over the insured's lifetime. Once this limit is reached, the insured is responsible for all additional costs. Understanding coverage limits is important for policyholders to plan for potential healthcare expenses. Question 100. What is a key aspect of the underwriting process for health insurance? A. Determining the insured's medical history. B. Issuing policy quotes without risk assessment. C. Basing premiums solely on age and gender. D. Excluding pre-existing conditions from coverage. Correct answer. A. Determining the insured's medical history. Explanation. The underwriting process for health insurance involves assessing the applicant's medical history, lifestyle factors, and other risk indicators to determine insurability and appropriate premium rates. Insurers analyze this information to evaluate potential risks associated with providing coverage to an individual. Question 101. Which of the following factors typically affects insurability in health insurance underwriting? A. Gender and marital status. B. Occupation and income level. C. Blood type and genetic predisposition. D. Compliance with tax regulations. Correct answer. B. Occupation and income level. Explanation. Factors such as occupation and income level can influence an individual's insurability in health insurance underwriting. Certain occupations or income levels may be associated with higher or lower risks, affecting the insurer's decision to issue coverage or determine premium rates. Question 102. What is the purpose of risk selection and classification in health insurance underwriting? A. To deny coverage to high-risk individuals. B. To determine policy issuance without risk assessment. C. To group individuals into risk categories for premium calculation. D. To exclude coverage for certain medical conditions. Correct answer. C. To group individuals into risk categories for premium calculation. Explanation. Risk selection and classification involve grouping individuals based on risk factors to calculate appropriate premium rates. Insurers use this process to assign risk categories and determine the level of coverage and associated costs for each insured individual. Question 103. Which statement accurately describes state and federal regulations governing health insurance? A. State regulations supersede federal regulations in all instances. B. Federal regulations govern insurance premiums, while state regulations cover provider networks. C. Both state and federal regulations play a role in governing health insurance practices. D. Health insurance is not subject to any regulatory oversight. Correct answer. C. Both state and federal regulations play a role in governing health insurance practices. Explanation. Health insurance is regulated by both state and federal laws. States have the authority to regulate insurance within their borders, while federal laws like the Affordable Care Act, ACA, establish minimum standards and requirements that apply nationwide. Question 104. What key provisions are included in the Affordable Care Act, ACA? A. Mandates coverage for pre-existing conditions and dependent coverage up to age 26. B. Mandates specific premium amounts for all health plans. C. Exempts individuals from tax penalties for not having health insurance. D. Allows insurers to deny coverage based on age and gender. Correct answer. A. Mandates coverage for pre-existing conditions and dependent coverage up to age 26. Explanation. The Affordable Care Act, ACA, includes important provisions such as mandating coverage for pre-existing conditions and allowing young adults to stay on their parents' health insurance plans until age 26. These provisions aim to improve access to healthcare and protect consumers. Question 105. What do HIPAA regulations primarily address in the context of health insurance? A. Regulations related to Medicare enrollment and eligibility. B. Privacy rules and protections for patients' health information. C. Regulations governing insurance premiums and deductibles. D. Guidelines for healthcare provider licensing. Correct answer. B. Privacy rules and protections for patients' health information. Explanation. HIPAA, Health Insurance Portability and Accountability Act, regulations primarily focus on privacy rules and protections for patients' health information. These regulations aim to safeguard individuals' health data and ensure its confidentiality within the healthcare system. Question 106. Which statement accurately describes health insurance exchanges, marketplaces? A. Health insurance exchanges are only available to Medicare beneficiaries. B. Health insurance exchanges are state-run platforms that facilitate the purchase of health insurance plans. C. Health insurance exchanges are exclusively for employer-sponsored health plans. D. Health insurance exchanges are prohibited in Michigan. Correct answer. B. Health insurance exchanges are state-run platforms that facilitate the purchase of health insurance plans. Explanation. Health insurance exchanges, also known as marketplaces, are state-run platforms where individuals and small businesses can compare and purchase health insurance plans. These exchanges were established as part of the Affordable Care Act, ACA, to provide a transparent marketplace for insurance options. Question 107. When can individuals typically enroll in a health insurance marketplace plan outside of the open enrollment period? A. Only if they experience a premium increase. B. During the annual open enrollment period. C. If they experience a qualifying life event, such as marriage or birth of a child. D. Health insurance marketplace plans do not have special enrollment options. Correct answer. C. If they experience a qualifying life event, such as marriage or birth of a child. Explanation. Individuals can enroll in a health insurance marketplace plan outside of the open enrollment period if they experience a qualifying life event, such as getting married, having a baby, or losing other health coverage. This triggers a special enrollment period during which they can select a new plan. Question 108. What are subsidies and premium tax credits offered through health insurance marketplaces? A. Tax penalties for individuals without insurance coverage. B. Discounts on medical services for low-income individuals. C. Financial assistance to help lower-income individuals and families afford health insurance premiums. D. Tax deductions for health insurance companies. Correct answer. C. Financial assistance to help lower-income individuals and families afford health insurance premiums. Explanation. Subsidies and premium tax credits provided through health insurance marketplaces are financial assistance programs designed to help lower-income individuals and families afford health insurance premiums. These programs aim to make health insurance coverage more accessible and affordable for those who qualify. Question 109. What is a key characteristic of managed care organizations, MCOs? A. They primarily offer fee-for-service reimbursement models. B. They focus on maximizing out-of-pocket costs for members. C. They emphasize preventive care and care coordination. D. They are not regulated by state insurance departments. Correct answer. C. They emphasize preventive care and care coordination. Explanation. Managed care organizations, MCOs, emphasize preventive care and care coordination as key components of their approach. They aim to improve health outcomes and control costs by promoting preventive services and coordinating care across different providers. Question 110. Which statement accurately describes network structures and provider contracting in managed care? A. MCOs do not have networks and allow members to see any provider they choose. B. MCOs typically have exclusive contracts with only one provider in each specialty. C. MCOs use provider networks to negotiate discounted rates with participating providers. D. MCOs are required to cover out-of-network providers at the same rate as in-network providers. Correct answer. C. MCOs use provider networks to negotiate discounted rates with participating providers. Explanation. Managed care organizations, MCOs, use provider networks to negotiate discounted rates with participating providers. These networks allow MCOs to control costs and ensure that members have access to affordable care within the network. Question 111. What is the purpose of utilization review in managed care? A. To limit access to necessary medical services. B. To maximize healthcare spending for members. C. To ensure appropriate use of healthcare resources. D. To provide unlimited coverage for all medical treatments. Correct answer. C. To ensure appropriate use of healthcare resources. Explanation. Utilization review is a managed care technique used to ensure the appropriate use of healthcare resources. It involves evaluating the medical necessity, appropriateness, and efficiency of healthcare services provided to patients, helping to control costs and improve quality of care. Question 112. What is a primary goal of health insurance claims processing and adjudication? A. Delaying payments to healthcare providers. B. Ensuring accurate and timely reimbursement for covered services. C. Denying claims to minimize insurers' expenses. D. Increasing administrative costs for policyholders. Correct answer. B. Ensuring accurate and timely reimbursement for covered services. Explanation. Health insurance claims processing and adjudication aim to ensure accurate and timely reimbursement for covered services. This process involves reviewing claims for completeness, determining coverage based on policy provisions, and processing payments to healthcare providers promptly. Question 113. What information is typically included in an explanation of benefits, EOB, provided to policyholders? A. Detailed medical diagnosis and treatment recommendations. B. Cost breakdown of administrative fees charged by the insurer. C. Summary of services rendered, amount billed, and insurance coverage. D. Personal contact information of the healthcare provider. Correct answer. C. Summary of services rendered, amount billed, and insurance coverage. Explanation. An explanation of benefits, EOB, typically includes a summary of services rendered, amount billed by the healthcare provider, insurance coverage details, such as deductible and coinsurance, and any applicable member responsibility, e.g., copay or coinsurance. It serves as a communication tool to inform policyholders about the status of their claims. Question 114. How does health insurance companies prevent and detect fraud in claims processing? A. By reimbursing claims without verification. B. By conducting thorough reviews of claims data and patterns. C. By increasing premiums for policyholders. D. By outsourcing claims processing to third-party vendors. Correct answer. B. By conducting thorough reviews of claims data and patterns. Explanation. Health insurance companies prevent and detect fraud in claims processing by conducting thorough reviews of claims data and patterns. This involves analyzing claim submissions for inconsistencies, conducting audits, and leveraging technology to identify potential fraudulent activities, ultimately helping to protect policyholders and maintain the integrity of the insurance system. Question 115. Which ethical consideration is important in health insurance sales and service to ensure fairness and transparency? A. Misrepresenting policy terms and benefits to consumers. B. Providing accurate and truthful information to consumers. C. Using high-pressure sales tactics to increase policy sales. D. Concealing information about coverage limitations. Correct answer. B. Providing accurate and truthful information to consumers. Explanation. Ethical health insurance sales and service require providing accurate and truthful information to consumers. Agents should clearly explain policy terms, benefits, and limitations to help consumers make informed decisions about their coverage. Question 116. What are consumer rights and protections in health insurance, as outlined by regulations? A. Right to unlimited coverage without premiums. B. Right to timely and fair claims processing. C. Right to deny coverage based on pre-existing conditions. D. Right to modify policy terms without consent. Correct answer. B. Right to timely and fair claims processing. Explanation. Consumer rights and protections in health insurance include the right to timely and fair claims processing. Regulations ensure that insurers process claims promptly and fairly, adhering to policy terms and coverage provisions. Question 117. Which practice promotes fair marketing and sales practices in health insurance? A. Offering discriminatory pricing based on race or ethnicity. B. Providing accurate and unbiased information to consumers. C. Excluding certain individuals from coverage without justification. D. Pressuring consumers to purchase unnecessary coverage. Correct answer. B. Providing accurate and unbiased information to consumers. Explanation. Fair marketing and sales practices in health insurance involve providing accurate and unbiased information to consumers. Agents should avoid discriminatory practices and ensure that all individuals have access to transparent and fair insurance options. Question 118. What type of supplemental health insurance product typically covers expenses related to routine dental care and procedures? A. Disability insurance. B. Vision insurance. C. Dental insurance. D. Long-term care insurance. Correct answer. C. Dental insurance. Explanation. Dental insurance is a supplemental health insurance product designed to cover expenses related to routine dental care, such as cleanings, fillings, and other dental procedures. It helps individuals manage the costs associated with maintaining good dental health. Question 119. Which of the following is an optional policy rider that can be added to a health insurance policy to cover specific additional risks? A. Pre-existing condition exclusion. B. Guaranteed renewable provision. C. Waiver of premium rider. D. Accidental death benefit rider. Correct answer: D. Accidental death benefit rider. Explanation: an accidental death benefit rider is an optional policy rider that can be added to a health insurance policy to provide an additional benefit in the event of accidental death. This rider is designed to offer financial protection to the insured's beneficiaries in case of accidental death. Question 120. What type of insurance product is specifically designed to provide coverage for major illnesses such as cancer, heart attack, or stroke? A. Disability insurance. B. Long-term care insurance. C. Critical illness insurance. D. Vision insurance. Correct answer: C. Critical illness insurance. Explanation: critical illness insurance is a specialized insurance product that provides coverage for major illnesses such as cancer, heart attack, or stroke. It pays a lump sum benefit to the insured upon diagnosis of a covered critical illness, which can help cover medical expenses and other financial needs during recovery.